there's always going to be noise. There's always going to be individuals who saying the sky is falling in to target panic. That's what the media does. Even after I was burned with the short sales that I had, I still kept buying. It's okay to fail. You come back stronger, you win. Actually, I did better when they were screaming panic versus when everything is beautiful and blooming outside. So for me now, my mindset, when I hear panic or red light siren, it's time to go all in and buy more. Go get in those rooms, go shake hands, just go take actions and try to find like-minded individuals who you mesh with. And that's how, and go ahead and get started.
What's up, my friends? Today, we are thrilled to host a prominent figure in the real estate investment world, Mr. Melvin Landry. Melvin is the visionary founder of More-Land Equity Capital, with a diversified real estate portfolio both inside and outside of Pennsylvania. He not only navigates the dynamic world of real estate, but also imparts his expertise as a college professor in economics and marketing. With over 20 years of hands-on expertise in corporate procurement and supply chain management across diverse industries, Melvin brings a wealth of knowledge to the table. Without further ado, let's dive into the story of Melvin Landry. Hey, Melvin, welcome to the show. Happy New Year.
Hey, Happy New Year. Thanks for having me, Albert. I appreciate it, man.
My pleasure, too. Do you mind telling the audience a bit about yourself?
Sure. So Melvin Landry, I'm located in Pittsburgh, Pennsylvania. I've been investing in real estate since 2005. And just been, it's been a journey. Kind of started off doing single family and I kind of have jumped over and grown a little bit into the notion of multifamily and other alternative investments. And look, it's been good to kind of be in real estate, working with partners, and also kind of looking at the growth trajectory, which has been pretty cool to see.
Oh, yeah, pretty long history of real estate journey. Looks like, okay, if I hear correctly, you started your real estate journey back to 2005. That was before the '08 crisis, right?
Yep.
Before that, what triggered you to venture into this field?
Well, for me, at first, I just got into it to get a couple of rentals. Have a diversification of part of my portfolio. And look, when I started buying, I went to a seminar. The seminar back when was Brookview Financial. And kind of talked about, look, no money down if you buy the property right. And got the opportunity to kind of get in and got my feet wet. And I purchased a duplex, actually about 18 minutes from my house now. I got into real estate and bought it for $32,000 way back when. And I renovated it and it's cash flow quite well, that duplex. And I went through affordable housing to find my tenants and it ended up working out good.
Cool. And you mentioned you started with single family and then you buy a duplex, this like a small multifamily things after you purchase single family rental.
Well, no, that duplex was actually my first purchase. It was a duplex.
Okay.
And then I started buying single family homes and kind of stayed along that front, buying the singles. I ended up buying in 3 states when I first started. So I was stretched across I was stretched from coast to coast. So I had a property in Arizona, in Indiana, and Pennsylvania. And I was living in Nebraska at the time when I did it.
Oh, that's pretty cool. So in that moment, how do you feel about the cash flow part? You're single, you're small duplex, a small multifamily. Which one you feel stronger?
At the time, I got into the duplex. It was my first time, my first renovation, I was working with HUD on programs. And, the mindset had shifted to the notion that, look, I can buy these singles relatively quickly and get them turned around relatively quickly. So that was the mindset at the time. So kind of went opposite the scale and mindset back then. So.
All right, pretty good. From your intro, I also know that you're a economics and marketing professor in college.
Yeah.
How has your academic background in this field influenced your approach in investing in real estate?
Well, now more than ever, right? I'm thinking about being able to scale up and scale fast. I think that is key. Additionally, right, when you talk about marketing, right, you need to be able to market to find the right tenants, the right partners in terms of vendors and things of that nature. So I think it correlates and work hand in hand. But getting back to the notion of the bread and butter for what I like to teach, which is econ, just kind of understanding opportunities on how to scale and scale fast. I think that's key.
Which means you have utilized what you have taught in the school, in the academic world, in your real estate investments. So you use all that kind of techniques.
Yeah,
That's amazing.
Yeah, and then, at the end of the day, right? You got to take the step. You got to take the plunge to kind of get in and just take action. I think that's key. There are certain things in real estate that a textbook will never teach. So you just got to be hands-on, got to take action, right? Even with investments, right? So, changing the mindset, I think, is key. And for me, it was changing from a saver's mindset to an investment mindset. And I think once you get that battle halfway across the line, you'll be in good shape for an opportunity for financial freedom at the end of the day.
I totally agree about taking action. So, and also massive actions. Per Tony Robbins' comment.
Indeed.
Yeah. You also mentioned about you have the other kind of asset, alternative asset, such as a self-storage, the ChipoNet, if I remember correctly. So, what motivated you to invest in those sectors?
I mean, look, at the end of the day, it's about getting education. So, I knew I wanted to get into self-storage. Where the opportunity would have kind of came, I didn't know. And we ended up part of another kind of consortium group of real estate professionals and folks who were doing deals and things of that nature. An opportunity came about for a 517 unit in Columbia, South Carolina, with partners who I felt I had knew in terms of helping to get things over the finish line. So that was key. That was half the battle there. And I got into a triple net opportunity with another partner in the deal I invested in previously. And it's a know-like trust relationship at the end of the day. You gotta know someone, you gotta like them, you gotta trust them. And look, when they brought this triple net opportunity to the fore, we're like, look, I got to be a part of this, right?
Yeah.
And I came in as a passive investor there. So you can be an active investor and you can be a passive investor yet. Well, we pride ourselves on doing both for the benefits that it brings to the forefront. So, we try to do a sizable amount of active deals if we can. And additionally, we'll try to do some passive investments also as well. So that's key to be able to do both.
Yeah, I feel the same with you. Like passive investors, like the merit part is like, okay, you have time. You release your time from investing as an LP perspective, which is passive. But from active investor perspective, like acting as like a co-GP or operator, you got a lot of hands-on experience, and they help you grows, help your knowledge grows, and also help your wealth grows exponentially.
It's work. I mean, so don't the GP job title, it's a lot of work. So, folks just need to be transparent in terms of what they can, what they cannot handle, in the realms of kind of being a part of an opportunity. So just want to kind of share that as well.
Yeah, I'm totally with you. So in terms of this kind of a diversified portfolio, do you value more about equity gains or do you value more about cash flow?
You know what? That question is asked a lot. I get asked a lot, why do you invest? And look, for me, number one thing for me that I invest for is for depreciation. It's a big deal for me. The cash flow is nice, but at the end of the day, I'm not relying on the cash flow. Look, I still work a job, and I have a certain amount of time that I'm probably going to remain in my job. So, some folks rely on cash flow from their investments to kind of help fuel their lifestyle. It's a little different for me. So a big thing for me is depreciation. I work a regular job. I teach classes also as well at different schools. there comes a time that taxes are due, right? So
Yeah.
at the end of the time, but I am an investor as well, and really pride myself on being active and passive in investments to help offset and bring efficiencies to the tax line, which is a big deal for me, right?
Yeah.
Understanding, getting educated on the intricacies of the tax law, I think is key, at least for me. And look, number one line item for me, look, is not the cash flow, it's the depreciation, hands down.
The depreciation part turned it like a paper loss.
Yes.
Yeah, people call it paper loss sometimes. It is a very unique benefit that investor can take out of this real estate investment field. Like not any other investment, like stock doesn't have this kind of a benefit. So I like that part too.
Yeah, indeed.
There's another question about your early journey. Were there any challenges you faced in your early real estate investment journey, and how do you handle this kind of challenges? Can you share some lesson learned?
Yeah, well, I got started in 2005, and I got bit by 2008, 2009. I ended up short selling a few properties, but
That's painful.
yeah, it was scary, right? Because I was still relatively new into the game, and came out okay. Licked my wounds, and we moved forward. So from that, right, when I say I was living in the middle of the country, living in Nebraska, I was investing in 3 states. So after that happened, I just narrowed down to one. I stuck to my bread and butter, which did well for me. And I started investing in Pennsylvania. And in between that time, I was living in Nebraska. I moved to Las Vegas for another job. And between the time in Las Vegas, I met my spouse, my beautiful wife now. And we ended up moving to Dallas. So, stayed with PA through thick and thin. And we opened up, a business venture that didn't quite go quite well. And then we ended up leaving Dallas and bring us back to where it at least started for me in Pittsburgh, So it's funny how things go full circle. So, yeah.
So, yeah, back to a little bit about the short sale experience we had during the 08 crisis. Why do you sell? Is that because of like vacancy, short of cash flow, then you have to dump it?
Yep, that was absolutely right.
All right. So
in both cases, in the properties I short sold, I ended up having a vacancy, right? So, which lends to the strategic vision of scaling up, right? Buying larger, right? With nobody living in that condo in Arizona, I'm at 0% vacancy. That's not good. Not good when the mortgage is still due. Okay.
Yeah.
Same thing with the single family house, right? It was one. And after they move out, I'm stuck with the bill, and I still got to pay it. So that was an eye-opening experience there, right? And 100% occupied for one unit is better than having a 0% vacancy. And look, I learned pretty quickly what you need to do to kind of pivot, course correct, etc. So yeah.
Yeah. So talking about this occupancy stuff, like single family, I think one of the biggest drawback or disadvantage of single family is like, okay, on one unit, one tenant gone, and that unit 100% of vacant. And I know that you have getting to the commercial category, like a 4 unit plus. You have a lot of investment per our chat before.
Yep.
You getting to the commercial world, a lot of scalable commercial asset. Why do you still keep single family portfolio in your home market?
That's a good question. So, I don't hold single family specifically for rentals anymore. And look, for the single family I do have, I aim out to be the bank. So I will, in many cases, my target is, look, I'm looking for distressed properties. And in some cases over the years, I've had individuals who've given me properties. Take over the taxes. I don't want it. Fine. I'll take it over. Get up the back taxes. And then my thinking now, my mindset is, how can I monetize off a single family house? I can fix it up if it's in the right area and can flip it off. Or, I don't do much wholesaling, but I do a lot of, if I wanted to keep it in the portfolio, I could, because I control the asset. Or I can go fix it up and be the bank, right? And do an owner finance loan and offer more attractive terms than what banks are throwing out there for someone in need. That's a substantial game changer in terms of financial cash flow. And look, I mean, when you're talking about a single family, right, the lease or quote unquote contract is just as stringent as a bank promissory note.
Yeah.
Right. And it's easy to take the property back. So you got to have provisions written in those agreements to ensure that, there are addendums to these laws where you may not be able to get someone out the property in an adequate amount of time. So you need to know your local laws as well. And that goes without saying, given I've invested in this area since 2005. So, man, in another year, it'll be 20 years. Yeah.
Cool. I'm totally with you. All right. So still about the portfolio, in terms of portfolio balance, how do you balance and optimize your investment portfolio between the multifamily and other alternative asset and smaller properties? Like what proportion you say cover this and allocate to that, something like that?
I would say, if I had to kind of break it out, I'd say larger kind of syndicated type deals. My portfolio is probably 35%. The smaller multifamily is probably 30%. Look, we try to buy anything and everything in our backyard, and there is a huge waiting list in terms of affordable housing opportunities. So you get them, trust me, they will come, right? And there's a rigor to the process that we evaluate tenants. But yeah, the demand is there. So we're going to keep buying in our own backyard. We're building relationships. And look, that's half the battle, right? From our ordeal, real estate ordeal. And look, we look to get into larger syndications as well, partnering up, helping to bring equity deals to kind of get them closed and run them the right way. So, and then another third is basically alternative as, a little bit of, small single family that I've even taken on as distress and they've given it to me. I've turned around and, being able to kind of provide housing to folks in need at a favorable term versus maybe see what a bank may offer.
Cool. You mentioned to me that you also get into the multifamily syndication as a co-GP, co-sponsor.
Yep.
Can you talk a little bit more about your first role as a co-GP in a multifamily deal?
Sure. First opportunity I had was a 48 unit in San Antonio, Texas. That we purchased with partners that was in the same mastermind, capital raising mastermind that we're part of. So we got into that opportunity to help raise a substantial amount of funds, get it closed before the end of the year, and ended up working out well. So we're working with property managers and the lead asset managers to ensuring continuity of the asset, ensuring occupancy is at the high percentage, and making sure that we're proactive on dealing with service calls and things of that nature. So,
okay, in the asset management stage, which is a very important stage of the whole cycle, could you talk a bit more about how you collaborate, how you guys collaborate to make this process as smooth as possible to improve the NOI, increase the performance, things like that?
I think every property is going to be different, right? So, but we always look to ensure from a management of it, right? We're looking to ensure we capture the right tenant at the end of the day, right? We do a thorough vetting process, just like the asset managers and PMs out there also as well. Because we manage our own portfolio in our local market, and we feel we have the bandwidth to continually bring and optimize out our own portfolio and optimizing the expense ratio, right? We're part of a mastermind group for operations management and apartment. So it's good to be in those rooms as well, because you can gain synergies and get some key nuggets to help implement at other properties across the board.
Cool. All right. So let's talk about a bit about the market.
Sure.
So nowadays, the world of real estate are ever changing. The market trends are the dynamics ever changing. How do you stay ahead of the curve and ensure strategies remain effective and profitable?
When you say staying ahead of the curve, right? So we subscribe to one of the local outlets for multifamily real estate subscription agreements on an annual basis that we're part of, we kind of get our hands to data at the drop of a dime, which is cool and key. I will say that along with kind of being really heavily engaged in your local market and in collaboration with folks who take with program rentals, I think is a key facet also as well. So you hear the notion of, affordable housing, Section 8 housing, program type rentals, right? These are programs that we strive to get into. Know the program very well. I participated in the program way since 2005, 2006. So, and it's about understanding, the intricacies that's associated to it. So, but we're bullish on affordable housing. We love it. Look, it's a good way to kind of help give back, help provide housing for those in needs. And it's, the rates are way competitive from a market rate standpoint, which is pretty cool to see. So, yeah.
All right. So comparing the current market with the market before 08 crisis, because a lot of people saying, oh, there's crash coming. People, a lot of, YouTubers, organization forecast crash since 2020. And you also experienced this upturn and downturn, and actually multiple upturn and downturn between then and now. Actually, 08 is a peak, and then there's like a 2022 is another peak. So, what's your feeling? How you react to this kind of comment from this whatever we call noise around the world or whatever? So, how you feel about it?
That's a good question, man. So, look. There's always going to be noise. There's always going to be individuals who saying the sky is falling in, the target panic. That's what the media does. Now you kind of gotta look outside of that. And even when the sky is falling, it's still a good time to buy real estate. I did it. Even after I was burned with the short sales that I had, I still kept buying and did well. Did very well. Actually, I did better when they were screaming panic versus when everything is beautiful and blooming outside. So for me now, my mindset, when I hear panic or red light siren, it's time to go all in and buy more.
It is. It's all about number, business plan, income, profit, loss, in particular loss, risk mitigation. Right.
At the end of the day, that's what mattered. So, you got a lot of folks. I'm hearing a lot of peers, man, like pencils down. That's okay. Our pencils are up, right? And sometimes, look, a good friend of mine who is one of the best asset managers out in the marketplace. I was at a conference in Texas, and we're sitting down having dinner. And one of the things he said is like, man, look, you can't get in the batter's box and swing for a home run every time. It's okay to get base hits and bunts sometimes. Right. And I kind of took that to heart, right? Particularly, right? I don't have to buy huge, big 400 or 500. It'd be nice. That comes with risk. It's okay maybe to get smaller. I know my market, I know my numbers, know what I'm trying to target. I know what I can get from a potential rents. And there's a huge demand there. So that's a pretty cool situation to be a part of. And look, man, if I can get continual base hits, a single here, a bunt there, and I'm getting on base with units, I'm winning. So, yeah.
Your comment about I know my market, and that's important.
That's important.
Yeah, invest in what you know. Don't gamble. So, and also,
indeed,
continue investing. Like this investing is a business. Business, you got to continue to run. But just adopting different strategy in different cycle, different situation.
Right.
So, all right. So for market now, you're observing what you are currently observing in the multifamily real estate market for now and for next year or so, 2024, 2025, kind of market trend you're observing or expecting.
Yeah, I will look. Here's what I'll say. From an economic standpoint, labor is still very strong. Labor is the wild card with regards to interest rates. ideally, look, they painted a huge glossy picture. Oh, we're coming down with rates 6 times in 2024. Given the way things are now, I'd be surprised if it's 2 or 3, maybe, right? You know, the media screaming about, there's some layoffs, but it's not, it hadn't been as prevalent as we thought it may have been. So, you got a booming economy that's still going well. You have, in some respective regards, still some impasse in terms of the gap between acts, between buyers and sellers kind of coming to the table to get deals to happen. So, and that's normal too, right? So not much movement. Our pencils are still up, and it's about sticking to your philosophical traits in terms of how you buy, what you buy, and in which manner the way that you buy it. So that has been key for us, particularly in our own market, regardless of size, and we're sticking to it. And look, man, when you've been doing this for a while, understanding, the compelling reasons for getting to what you need to get to, and it may not be as fast as others may have it. So, and that's okay too. So, for us, we don't try to keep up with the Joneses in real estate also as well. We know what we know our target, we attack it accordingly, and we do well by it. And we're coming out ahead, and we're reaping the benefits of it, which is pretty cool to see.
Cool. Then what do you see your business within the next 2 to 5 years? Your roadmap, your plan?
Great question. I'll say this. 3 to 5 years for our own market, we hope to 10, 12-fold our door count in our own market. 85 to 90% of that we're pushing, and we're passionate about affordable housing. We know the market, we know the space, and looking to grow that. Look, the demand, I'm getting calls and emails daily. You have housing, so the demand is there. So it's being able to tailor the model and make the right decisions to try to attract and conform to the demand that's there, and it's there. There's housing needs everywhere. So I'd say 10 to 12x the door count today in the next 3 to 5 years, in addition to getting diversified in other areas. So try to get into some more storage, into some more triple net deals. We own a piece of land, and we're looking at some build and rent communities as well. We're trying to see what's the most optimal approach for the land that we have and we own, and that we're going to looking to operate. So continuously getting educated, continuously getting diversified, continuously taking action, and just slowly navigating through the paths, man, to get to where we want to get to. So I think that's next 3 to 5 years. That's where we're trying to be. If I had to just draw the number, I would love to have 100 plus doors, exclusive GP ownership in my own market.
I like your plan. I like your roadmap. Looks like this is what I'm trying to do as well.
Yeah, man. Putting the plan in place, and look, you may not get there in 12 months, right? It may be 36 to 48 months to get there. But as long as you're sticking to your game plan and you're laser focused and obsessed with the goal to get there, you'll win. Guaranteed.
Cool. Then about a lot of this kind of your roadmap, your plan, this is actually a lot of things, right? A lot of job, a lot of work. How do you balance a thriving real estate career in maintaining a healthy lifestyle with family, and in particular your college professor job? Go ahead.
Yeah, hey, man, great question. So look, everyone's situation is different. We had to kind of balance things out. So look, man, my wife recently retired in 2022.
Right.
Yeah, she retired and felt it was necessary for her to be the real estate professional versus me. I already had multiple jobs, so you got to think about things linear, right? I can't be this and that and that. I got 4 or 5 different hats that I wear. So we felt it was best to kind of course correct, shift. Wife became the real estate professional. She's a realtor locally, and she helps with the underwriting on deals. I'm still kind of taking on many different hats in terms of maintaining my the employment front, as well as managing the marketing, the direct mail campaigns to find sellers, and continuously putting in offers and overseeing projects or renovations, right? So, being an asset manager as well. So we wear multiple hats, but that's the fun part about it, man. I mean, I can be a professor, and I can work my 9-to-5 job. I can go out and be asset manager. I'm dealing with tenants. I mean, it's never a dull moment. It's pretty cool, man. So versus just doing one thing and just that's it. That's a dull life. That's not what I want. So yeah.
I can tell you really enjoy it.
Yeah,
I saw your like a Facebook short video a lot. You just show, hey, today I visited this property. Let's see what's going. I recently see a lot of this kind of video on your Facebook.
Yeah, man. I mean, if I go visit a property, it's cold, right? 20 degrees. I got hat on, jacket. We're walking through, and like this is what it is, right? So
yeah,
practice what you preach, which is what we try to do. We practice getting diversified. We're implementing the plan, and it's good, man. It's good to for folks to see and know what you're doing. That is key too. Putting the word out, right? Spread the word in terms of real estate, alternative assets, alternative investments. There's another way, right? And just kind of helping to change the mindset. It worked for me. It worked for others too. So I just want to try to share that story accordingly.
Cool. Yeah. Finally, what message or advice you have for aspiring investors looking to embrace a wealth building mindset and explore new horizons in real estate?
I would say kind of seek out education, seek out some mentors, and just get in the right rooms. I mean, look, some mentorships are extremely expensive. You and I do know that, right, Albert?
We do.
But at the same time, right, there's conferences all across the country. You can get in, right? Conferences. Some of them are not super expensive. Go get in those rooms, go shake hands, just go take actions and try to find like-minded individuals who you mesh with. And that's how, and go ahead and get started. Person one may not buy a 400-unit apartment complex on the first round. It may not happen, right? It didn't happen for me. But at the same time, guess what? I got educated when I've got that first duplex way back in 2005. I got more education in 2020, 2021, and it has allowed me now to become a passive investor in nearly 3,000 doors. So that's half the battle, sticking to the persistence and education, say for the greater good and enhancing your mindset. 'Cause it takes a while, dude. It doesn't happen overnight. It just doesn't happen overnight. And,
100%.
And look, I mean, certain instances I've changed. So now when I'm riding in the car, I don't listen to radio anymore. It's like I'm listening to podcasts. When I'm working out and I'm a runner, it's not music and vibes. I'm listening to Robert Kiyosaki, right? The Rich Dad, Poor Dad Money Show. Listening to all those episodes, just listening to the guests. It gets so much education, man. So many different viewpoints. And it's been helpful in helping to shape the mindset, think about things a little different. So, which is cool.
With you, mindset most important. Continue education, all important. Don't stop, don't quit. So then there's a success. There's no failure until you quit, right?
And look, you know what? Even if there is failure, I ran a business that failed. You learn better. You learn by failing.
Yeah,
so there's nothing,
Yeah, depends on how we define fail. So large fail. Yeah.
You know what? That was an aha moment for me. Listening to a podcast, like, we're not, in school, you're not encouraged to fail. In real estate, if you fail, you learn, you come out better. You have a runway that goes endless runway of opportunity. So it took me a while to digest that and think about that. Be like, man, you know what? That makes sense. It's okay to fail in real estate if something doesn't go right. As long as you come out stronger and you learn a little bit, learn something, right? To kind of help improve the situation versus before. So yeah, I mean, that was a mindset shift. It's like, wow, I didn't think about it that way, right? So, but I mean, it's indeed helpful. And regardless of the situation, it's okay to fail. You come back stronger, you win.
Oh, yeah. Okay. Before we end the show, what is the best way for our audience to reach out to you, learn more about your investment strategies, your business, etc.? What's your contact, by the way?
Sure. Well, look, you can find me a multitude of different avenues. I have a website, www.morelandequity.com. It's all one word. I can be found on LinkedIn, Melvin Landry, Facebook, Melvin Landry, Instagram, Melvin Landry. I shouldn't be too hard to miss. So yeah.
All right, I'm going to put all this contact information down below the video's description part so that everyone can easily search.
Thank you.
Thank you so much again to come to the show, and I really enjoy talking to you, and I believe the audience enjoy listening to your story experience. This is great advice. I hope that your 2024 business in the future can continue to thrive, get more success. Thank you so much.
Thank you for the well wishes, Albert, and appreciate the opportunity being on the show. Thank you, sir.
订阅 ACMG 的资本团队邮件，关注高回报公寓楼地产项目。